Hello and welcome to the August edition of Pork Talk, AHDB's monthly pork market video series. This month, we're going to try and unpick what the rest of 2020 might have in store, a particularly tricky topic given the unusual level of uncertainty in the wider environment at the moment. Last month, we published our updated UK pork production and trade forecast. This year, we are expecting pig meat production to increase again, perhaps by as much as 4% overall. Strong slaughter numbers in late 2019 and early 2020 suggest there's been breeding herd growth, which is of course supportive of throughput. Although recently numbers coming forward have been limited, we think this reflects historic productivity challenges that have since eased. So in the coming weeks, we would expect numbers to pick up again. Carcass weights have also been consistently heavier this year, a trend we expect to continue, and this will also support pig meat production levels. How herd performance actually pans out remains a risk this forecast though. We have assumed a return to an improving trend in pigs for slaughter from Q3, but if this is not realised, slaughter could fall short of expectations. Uncertainty remains a feature of the outlook due to both COVID-19 and Brexit. However, there is only limited scope to significantly change slaughter levels over the next 12 to 18 months. More British pig meat is expected to be produced over that time, although overall demand for pig meat in the UK is likely to be lower. Although retail sales will remain elevated, this is not expected to compensate for lost eating out volumes over the coming months. Trade will play an important role in balancing the market. Imports have been much lower so far this year, which is at least partly a reflection of Brexit stockpiling this time last year, as well as the disruption to food service demand. Increasing UK production also allows for some import displacement. Stockpiling may well feature again at the end of 2020, and low EU prices may mean imports are attractive at some points during the rest of the year, but we still expect imports to be 5% lower for 2020 overall. We have also assumed that Chinese demand is strong and even improves later in 2020. This would continue to draw product from the EU market, restricting product available to trade within the EU. On the back of this demand, our exports are also forecast to increase by a further 6% this year. However, in recent weeks we have seen some disruption in supplying the Chinese market due to coronavirus outbreaks in processing plants. The Netherlands has been particularly affected, though some other suppliers have also temporarily suspended shipments, including one in the UK. Prolonged difficulties have the potential to dampen our export prospects, and if more product is retained on the EU market at lower prices, this could increase the competition British pork also faces from imports. It remains the case that the world is facing a significant pork deficit, which ought to enable pig prices to remain elevated this year. However, the situation is not without risk. High pork prices are largely contingent on good export prospects to China. If this turns out not to be the case, prices would come under pressure. For example, further spread of African swine fever in Europe and developments with the coronavirus both have the potential to impact trade with this market. The ongoing pandemic also means risks associated with slaughter disruption both here and on the continent continue. This has recently been demonstrated by the temporary closure of a significant German processing plant, a key destination for our cull sow exports, and cull prices have dropped accordingly. You can keep up to date with developments in the British pork market by visiting our analysis page on the AHDB website. You can also sign up for our Pork Weekly email to get updates direct to your inbox every Friday. If you've got any specific questions, feel free to send them to the team by emailing the address below, or simply leave a comment on this video.